Happy Monday, traders, and welcome to a new week in markets. Okay, so we did get some news, some headlines over the weekend. They were tariff related. And the news is that the US and Trump has imposed 30% tariffs on the EU, the European Union, and Mexico. So the key takeaways from that is that one is those tariffs, yes, they are high. Two is that the European Union does have a lot of countries, so that means that a lot of countries are going to get a high tariff. And then also the key takeaway is, look, they will go live on August the 2nd, so it's a couple of weeks away. And that Trump has basically said that if they retaliate, he would increase those tariffs. But in any case, look, August the 2nd is D-Day for tariffs. So look, there's no delays anymore. We're finally going to start collecting tariffs from all the countries from around the world, the US, and for the market, we're finally going to find out the impact on inflation of those tariffs. So the August inflation numbers are going to be super important, obviously. But we'll only find out those numbers in September. So we still do have to wait a couple of months, but the bottom line is that we're finally going to be finding out exactly how inflationary the tariffs are, and obviously the impact that that's going to have on bond yields and for Fed policy. So important couple of months coming up. Okay, so look, Asian markets have opened, so we are getting a bit of reaction to those headlines. So with equity markets, we're seeing Nasdaq and S&P futures, they opened immediately down 0.5%. Look, it's not a big sell-off. We've talked about this many times, that the market is, it has tariff fatigue, trading on tariffs, so we're not seeing huge moves on the back of it, but certainly, yes, the initial moves at the moment are risk off. This market is obviously trading near record highs, so we are coming from very elevated levels, but every single time we have had any sort of dip or retracement, the market has bought that aggressively. So not sure I would suggest putting the house on shorts this morning. Moving along, the currency markets look very subdued. No real big moves so far. Opening of Asia. I mean, one thing is that look, Aussie is risk currency, and also when we have seen the market move on the back of tariffs, and if we are seeing like risk off, the Aussie has been one of the go-to currencies that has traded lower on the back of that. Aussie is trading up highs to the years. For the year, up towards 67 cents. So I'm not sure if I'd be buying Aussie first thing this morning. If we move along to the commodity space, yes, gold, of course, it's higher. Gold closed around that 33.55 area on Friday, and we've traded as high already as 33.75. So up almost $20. Making highs this morning. Gold. Has been obviously one of the go-to markets, safe haven. It loves the tariff uncertainty, so yes, gold is bid this morning. But look, silver's very interesting. We mentioned this last week that technically silver on weekly charts was a textbook bull flag continuation pattern. If it broke above those highs at 37.30, then breaking that pattern, and we'd see a momentum spike high in prices. We saw that on Friday, and silver, it's traded as high as 38.50. These are 15-year highs. Silver's doing exceptionally well. No doubt it will be bought aggressively on dips, but you don't want to see it back below that 37.30 area, which would then say it's a false break of this chart pattern. But look, silver bulls, they're getting super excited about $40 targets. Are they realistic? Yeah, sure, of course. We're not too far away from that. But further out, the silver bulls, they really want $50. So let's see how that pans out. But certainly, silver's doing exceptionally well. Okay, I mean, Bitcoin on the weekend, yes, it's doing what Bitcoin normally does, and it's continues to trade higher. We're almost made 20,000. It's the highs were at 19,500. Look, that's a short-term target for the market, 120,000. So I'd be surprised if we see a big momentum move higher here, and especially if we are seeing, risk a touch lower. So I'm not sure I'd be chasing it at these levels. Maybe, short with a tight stop above 120,000. Anyway, look, this week we do get some important economic data coming out, big week. In the US on Tuesday, we do get US CPI data for June, and the market is expecting that data to marginally increase. So for the headline, last month it was at 2.4, market's looking for that to go up to 2.6. We're looking for the core number, which is probably more important, from around 2.8% year on year to go to 2.9%. Look, this is a big deal, as I described, that we're going to get the full effect of tariffs, coming after D-Day on August the 2nd. So if we do see inflation, now starting to increase before we see probably the more meaningful increase, I'd suggest that is not too good. Really, the judge of all of this is going to be the bond market. So you want to be watching US 2-year yields, which are around about that 3.9%. Don't want those going back above 4, that's for sure. US 10-year yields closed around 4.41 on Friday. You do not want those going back to 4.5 or 4.6, breaking higher above there. Certainly a very big risk negative. So look, yes, US CPI number, big deal, and watch bond yields closely. We also do get this week some US PPI numbers after CPI, so again, some more inflation data, and we also do get retail sales, so we get a check on the US consumer, so some good US economic data coming out to watch. Locally here in Australia, we also get some employment data coming out, and obviously we had an RBA that was on hold. The employment data on Thursday looks like the unemployment rate is supposed to remain steady around about 4.1%, which is very solid. So it sort of vindicates RBA waiting, but certainly that is something to watch out for as well. And then there's also some UK CPI and some Canadian CPI. So if you're trading sterling or Canadian dollar, that's going to be obviously something to watch out for. So yes, look, we've got some action coming this week. So good luck, and we will check back in with you shortly.